Okay, guys, welcome back. Now let's look back again to this strategy, because looking back to this strategy, you need to learn a little bit about this again and again so that you can practice. Uh, Now our strategy also depends on the same model. We will go one more time and we will also define our stop losses and our take profits as well. So here it is, downtrend, lower lows and lower highs. We know it's a downtrend. Now the price changes. It makes a higher low at this point, right? And then it breaks the high and moves upwards, right? So this is the area we know the price changes, the trend changes. And this is the area where our entry would be, right? So this is our entry. We enter over here and we put stop loss at this level. You can also put the stop loss over here, but there's no need for that because we now know that the trend has changed. So there is more likely that it will go up. So we can put our SL over at this point. Our entry was here. And now our TP depends on us. So either we can put our first TP at the next resistance, right? And when the TP is hit, we move our stop loss to the break-even point. We have an option. We can put our stop loss to break-even and let our profits run. Or we can just put the SL at the past price where it was, and our TP would be here. Then our second TP would be at the second resistance, and our third TP would be at the third resistance. So this is one criteria, right? Our second criteria would be to use Fibonacci. We will be using Fibonacci levels in our charts, and I will show you how you can put your TP there using the Fibonacci levels, and you will be amazed to see how accurate those results work. Okay, when the uptrend is over and we know a new lower high is made, it breaks through this point and start moving down, we know the downtrend has started. Our entry would be the break of this point, right? This would be our entry. And our stop loss would be at this level, right? Our next TP would be, our first TP would be at the next support. TP1 would be at the next support. TP2 would be at the next support after this one. And our third TP would be after this. Or we can use the Fibonacci levels. So you get the point? You can also move your stop loss to break even after first TP is hit. Now let's move on to our charts for this. Okay, let's use some regular charts. Okay, for this purpose, we also need to know a few criterias. Usually this happens when there is a major uptrend. First, there is a major uptrend, and then there is a low trend, right? Then a new trend starts. So here it is. As you can see, the prices are moving up, up, up. The prices are being very high all this time, and then change occurs. How did the change occur? Well, you can see this. It went down from here, right? Down from here till this point, and then it moved up back up, right? So new higher low is made. So when this point breaks up, why didn't I take this one? I didn't take this one. I took this one. Also remember one more point. So it qualifies as a higher low, lower high, when two consecutive candles, big candles, are made on the way up. At least two big candles, right? Similarly, for the downtrend as well, for the uptrend as well, you need two consecutive candles, two big consecutive candles. But it didn't come here, it came here. A lot of either a lot of small candles or two big candles at least. So at this point, at this very much point, we knew this point, and this was the higher new higher low, this area, and this was the point we need to break. So when it broke, right, we could have entered over here, and we could have probably put our stop loss at this point, right? And we could have driven our profits down there. Okay, let's see how our take profits would have worked out. So we can see it broke down and all the way it went riding down. So our first TP would be around this area. We could set it at why is it not working? Okay, let's use this one. So this area, right? It broke through this area. Our stop loss were at this area. So this would be around 900 points. Not bad. Our second TP would be around, either you can make it at this point, so this is another range area, or you can either put it at this point. At this point, it depends on you, right? Second TP would be around a little higher, ideally. I mean, so this would be your second TP, and your third TP could be around somewhere around here, right? Somewhere around here. There are a lot of lines we cannot concentrate on which ones to see. Let's make a new one. Let's look at a new one. Oops. Chart window. Move on to yellow template, and then we were here around March, this area. Okay. Now there can be second criteria as well. We can use Fibonacci for our taking profit. For Fibonacci, the ideal place is to use like this. When there is a new lower, when a new low is made, you have to put your cursor at this point. Just click and move it towards your new high, which is higher, lower high, right? And you can extend it to the right, and leave it. Now you can see you have to click over here, drag it up till this point, and just leave it. Now you can have your TPs, right? So your stop loss is above this point. Your first profit could be at 161.8%. The second profit could be at 261.8%, and the third could be around 423.6%, right? So this is how you can take your profits from here in H1 candle, right? Now let's move on to first a downtrend, a pure downtrend. We have seen this downtrend, a little bit range, but we need to know a solid entrance, right? solid entrance. So two bigger candles, we need two bigger candles. There we have two bigger candles, right? Two bigger candles. This was one candle, two bigger candles. Although there was a huge range, big range, we need to break this one. Bigger candle, you can see. So this is the new high, and this is the area you need to break. This is the area you need to break. Where could be our stop loss? Below here, right? Below this point. And where could our TP be? Take profit. Let's do this again. Okay. Okay. I need to put this to my right side. Why isn't this working properly? One more time. So almost at this point, right? Right? So we can see the entrance can be at this point because it broke from here. A stop loss could be at this point. Our first TP would be at here at this point. When the first TP can be hit, you can move your stop loss to your break even. But there is a cost for that. When it moves down, back down there, it can hit your break even, and you can get you won't get enough profit. But if you keep the stop loss at the down level, look what happens. It goes up, hits your second TP and third TP as well. So it's a very effective strategy, right? Let's look at another example. Any example we can see. Okay, let's look at CAD JPY. Yellow template. Okay, here you can see. Okay. Let's see a little controversial one, right? Okay. So it's a range. It's not that very effective. But when you look at in Renko, this becomes very easy. Okay. Can you see? A new higher low is made. It's easy to see. This is a small uptrend and this is a small downtrend, right? This area needs to be broken. So we will use this Fibonacci. Sorry, let's just put this at this area. This is the area needs to be broken. But let's consider this one, right? If we consider this one, then our stop loss would be hit. Yes, that's not the criteria. So let's consider this one, right? And this is our stop loss. It's a huge stop loss. Okay, and we will try to check if our TPs can be hit. Okay. So our TP would be hit at this point, but it would not come to the second TP. It can either go back to our break even or it can go back to our stop loss, right? So this is one criteria. Although we can see these candles and these strategies are not that effective. Renko charting is very effective. It's very easy to use. Here you can see a huge uptrend. After a huge uptrend, the more chances are going down, it becomes very effective. So this might be an area. This might be an area because two bigger candles upside, and there are two candles over here as well. So we can use this one as well. So this area can be also be used, right? Our stop loss could be at this level. So our Fibonacci becomes at this level, right? First TP, second TP, and third TP as well. Yes. So all the way down, up, down. Then it didn't break this. So we are still in the downtrend, right? Still in the downtrend, downtrend. Then there is a range. So when the range comes, this becomes a little ambiguous. Now let's move to another trendy pair. So JPB. Let's look at pound yen. It's one of the most trendiest pairs out there. Okay. Okay, I don't have it right on the internet right now. Let's look at pound USD. Okay. So downtrend, a new low, actually it's a double bottom, and then a new higher low and a break of this point, right? Why isn't this working? Okay. Now here you see. At least your first TP can be hit. Then you can move your break even, stop loss to break even. I usually do that. I am a more of a minimizing loss person and then the maximizing profit one. I need to make sure I don't lose money. So this can be another strategy. Great upper trend. Then you can also use this area, although very high difference there. Maybe a TP here, maybe or maybe not. It did hit the TP. It did hit. The stop loss level was very high. So you can use this in any way possible, right? Now in the next lecture, I will be using Renko charts and precisely why I prefer Renkos for this strategy. You will get to know in the next lecture. So see you in the next lecture.